Welcome back, champions. Another mind-boggling stock news. Here are the top 3 stocks for the day. Number 1. Adeco Agro SA. Adeco Agro SA is an agro-industrial company. The estimate for its current year earnings has been revised 5.9% downward over the last 60 days. The stock holds a P/E ratio of 7.02, while its industry has an average P/E of 11.11. Over the last 12 months, Agro's forward P/E has been as high as 12.97 and as low as 6.22, with a median of 10.25. Finally, our model also underscores that Agro has a P/CF ratio of 2.75. This data point considers a firm's operating cash flow and is frequently used to find companies that are undervalued when considering their solid cash outlook. Agro's P/CF compares to its industry's average P/CF of 6.98. Within the past 12 months, Agro's P/CF has been as high as 3.47 and as low as 2, with a median of 2.75. These are just a handful of the figures considered in Adeco Agro's great value grade. Still, they help show that the stock is likely being undervalued at the moment. Add this to the strength of its earnings outlook, and we can clearly see that Agro is an impressive value stock right now. Number 2. Aero Financial Corporation. Aero Financial Corporation is a bank holding company. The estimate for its current year earnings has been revised 10.4% downward over the last 60 days. Based in Glens Falls, Aero Financial is in the finance sector, and so far this year, shares have seen a price change of minus 10.63%. Currently paying a dividend of 27 cents per share, the company has a dividend yield of 4.33%. In comparison, the bank's Northeast Industries yield is 2.83%, while the S&P 500's yield is 1.61%. Looking at dividend growth, the company's current annualized dividend of $1.08 is up 2.3% from last year. Over the last 5 years, Aero Financial has increased its dividend 5 times on a year-over-year basis for an average annual increase of 4.15%. Looking ahead, future dividend growth will be dependent on earnings growth and payout ratio, which is the proportion of a company's annual earnings per share that it pays out as a dividend. Aero Financial's current payout ratio is 52%, meaning it paid out 52% of its trailing 12-month EPS as dividend. Aero is expecting earnings to expand this fiscal year as well. The estimate for 2024 is $2.60 per share, representing a year-over-year earnings growth rate of 46.89%. Number 3. Avnet Incorporated. Avnet Incorporated is an electronic component distributor company. The estimate for its current year earnings has been revised 7.3% downward over the last 60 days. Avnet reported $6.2 billion in revenue for the quarter ended December 2023, representing a year-over-year decline of 7.6%. EPS of $1.40 for the same period compares to $2 a year ago. The reported revenue represents a surprise of plus 0.86% over the estimate of $6.15 billion, with the consensus EPS estimate being $1.39. The EPS surprise was plus 0.72%. Which one would you pick?